Good day, good day. Welcome, welcome once again to another broadcast. It's my live broadcast on YouTube. It's the first one that I've done in a while. I've been actively preparing my offices for live broadcasts, and so we're going to see how these goes. Checking out my cameras, want to see what they look like, and at the same time doing a little bit of work. I have the screen right behind my camera, and I want to give you an opportunity to talk. Okay, I have my live comment set up. Thank you so much for being with me. We're going to see if we can amplify the audio just a little bit. Want to see what the sound sounds like. I don't have a microphone set up other than the webcam microphone, but we figured we'd try this out first, and then we'll begin to add new technologies, new equipment on there. But I want to talk just a little bit with you at the same time, get a chance to check out. Try to check out whether or not the equipment that I have is subpar, par, or below par. And that's bad, good, or best. So we'll check that out. And of course, there's other cameras that I have that we'll end up putting on. And so give everybody an opportunity to speak and let me know what your thoughts are. Hey, while I'm at it, wanted to talk a little bit. What your thoughts are. Let's see what it sounds like. Hey, while I'm at it, wanted to talk a little bit. Sounds pretty good. Why not? I'm sorry for the double audio right there, but I'll check the rest of that out later. Wanted to talk just a little bit while I'm on here, take advantage of being able to talk about what's happening with the banking institutions. And the banks that are closing down, first of all, banks close down all the time. It just happens to be now that the news is talking heavily about it. One bank closed down, which was the bank in California, Silicon Valley Bank, which is more of a hedge group that also provide banking banking products. It was registered with the FDIC, so therefore it was a government regulated bank. Now there's other types of government regulated banks that are a bit more secure. Insurance policies, for instance, are the best policies to secure any type of bank. So I just wanted to say this because there's actually a better tool than the banks. A lot of people like using banks. I started using platform money market accounts many years ago. I still have banking tools. There's no question about it. But I've had problems with my banks. For instance, PCN or PNC or whatever the name of that bank is now. It used to be BBVA that I was part of. And then PCN was a bank that was an app. It was an app bank that ended up buying brick and mortar. When they entered into buying brick and mortar, it just became very cumbersome. It was horrible, so I ended up shutting down 3 bank accounts with them. They caused me to go into default, and also deposits that were made were not tallied up till way after I ended up having some checks that arrived at the bank that I couldn't stop because the bank didn't have the tools to stop my payments. It was all in the process. They eventually cut me a check of that best I can see is I was probably shorted about $200 in transactional fees and penalties. But they did cut me a check trying to remedy the situation. But I think they were forced to do that by the government. It was just horrendous. So I got out of that bank. I'm banking with a different bank now, which is more of a steeple bank. That's not the name of the bank, but it's the type of bank. It's a very steepled bank. It's a bank that's secure. So I'm with that bank right now. But there's another way of banking. The FDIC and FDIC-backed products. The government comes in whenever a bank has an issue. They started this whole process from the market crash back in the 1929, 1930s. Let's talk the Great Depression, they call it. And it was because it was a run on banks where people were running, trying to pull money out of their bank right away. Well, if you use money market or insurance-backed bank accounts, you won't have that problem. Here's why. Number one, you can't have a run on the bank because your cash is readily available to you, but it's based on the insurance product that you have. So instead of taking your money and putting your money inside a bank for a bank to hold it, use it, because that's what they do. They lease it out or rent it out and loan it out to other people. So that's how they make their money. You actually buy an insurance policy, a life insurance policy, and then you fund the life insurance policy, and it comes with a banking tool, checking accounts and debit cards, that you can continue to put capital inside there, accruing interest at about 7%, depending on the account that you have. So it's more than any bank would have. But then it's guaranteed not by the FDIC, but it's guaranteed by your own insurance plan, which is fantastic. And so there's various tools that are out there. This is the old famous IUL, Index Universal Life. Yeah, it's an insurance product. It costs something, which you have to do anyway. You got to have life insurance. You're an idiot if you don't have life insurance. You must have life insurance. Protect your family, protect your children. So have life insurance policy anyway. Decent 500,000 or more in life insurance. I like to get to $1 million when you're a younger age. The older you get, you can begin to shrink the amount of money that would be of the face value. Why not? Because you're not going to make as much money. And if you can afford $1 million or plus, then it's worth it for you to do it because you're making that kind of money. But in the average Joe, I'm only talking about the average Joe. If you're, let's say, out of high school or college, up to 35, you want to have $1 million policy. If you haven't bought any policies yet and you're over 35 years of age, you want about $800,000 policy. Or $1 million if you can. That might be stretching it for some because the monthly fees begin to be very expensive. But if you're over 45, then chances are $500,000 for the average Joe works out fine. $500,000 works out fine. So go ahead and get a $500,000 face value policy. But together with the policy, you want to ask them to start a money market account. And if you start a money market account with an IUL, what the money market account does is that it's guaranteed by your own insurance policy, but not just your insurance policy, but insurance policies. These are already paid into insurances, whereas the FDIC is backed on the good nature of our federal government. Wink, wink. How good is that? So it's kind of a pun. But when you have a money market account, it's backed by the overall deposits of the insurance policies that are being placed. And so the banks are backed by bonds, but money markets are backed by insurance policies. So that's probably one of the better things to do. And mind you, let me put this safe harbor here. All that I have to say is speculative and for entertainment purposes. If you want to use it for education, it's completely up to you, but buyer beware, even though I'm not selling anything. But I'm giving you the advice that I've learned throughout the years of what I've seen. And so that's a way to protect your money. Now, why haven't these other companies have done that? Well, they have. And those that are inside the companies also provide insurance policies to protect themselves. And some people have called these insurance policies, what are they called? Parachutes, where they have fail-safes set up to where they, as an employee of that bank, is protected. And it comes by way of E&O insurance, that insurance policy, the executive officer insurance policy, the executive officers of the bank have this insurance policies, and those insurance policies that they have, number one, ensures that you can't sue them, and if you do, they're protected. But number two, it also ensures them that their salary will be protected, and they buy the insurance policy that if they lose their job or if the bank shuts down, they're going to receive a certain amount of money. And that's where a lot of these parachutes, these little fail-safes are built into in insurance policies. Well, why don't you and I take care of that? You might be asking yourself that question. Why aren't you actually participating in these types of insurance policies? Well, that's a good question. Why aren't you? Why are you not participating inside these insurance policies? You should. And the way you start, the number one problem that people have with buying insurance is that it costs. It costs. And if you look at an insurance policy and you don't sign on in any type of life insurance policy, is because you're living by paycheck to paycheck, or you're just not a scrupulous investor. You're not a very wise investor. And so what you want to do is you want to be able to back yourself up with insurance. There was, from the time I was 24 years old, there was a small amount of time that I didn't have insurance, life insurance. I hated it. I was uncomfortable. I didn't feel good. Probably about 2-3 years. I had enough assets where I felt a little comfortable because it was a bad, depressed time of our lives. We're talking about 2007, 8, 9, when the whole banking institution took the turn that they had. There was a part where I had a hard time being able to buy a decent life insurance policy. I was in my 40s. $1 million was a little high for me. I had a small life insurance plan that I knew my wife would be taken care of, but I like having a handsome life insurance plan to where she's taken care of and at the same time do business with it. So here's what I didn't like. I didn't like that little window that I didn't have insurance. So when I decided to buy insurance, now in my 50s, now the insurance that I buy is more in a GUI, which is GIL, actually guaranteed income life, to where I have a guaranteed income if something happens to me physically, if I whatever, I don't even want to assume, but if I have two issues and a doctor signs off on it, I'm going to have a lifetime salary that will be taking care of not just my medicals, but it's also going to take care of my livelihood and take care of my spouse. And then when I pass away, my spouse has a face value of an insurance policy that's taken care of. This is my rightful duty as a husband, not as a father, because my children are already old. They're already older. They don't, if they get anything from me, it's good for them. But in most cases, I'm only focused on my wife. If my wife doesn't survive me, then of course my insurance policies will be divided up amongst my kids. But primary priority number one is my wife. And then my wife has life insurance. So if she survives me, she has a life insurance plan. And who's she going to leave that over to? I've already told her, don't give it to an ex-husband. Don't get married. But I said, make sure that it's left over to the children or the grandchildren, which the grandchildren is actually the better place to put it than for the children, because the children will have their own life insurance plans, which they already do right now. I have my youngest son that he is now entering into a life insurance plan, but he's in his early 20s, and it's an IUL that he's entering into. My granddaughter has an IUL. She's 13 years of age. Other family members that I have are IULs. They have IULs. That's the best way to start. So this is how you could protect your money. I suffered of the 2007-2008 banking crisis. I lost property. I was also a real estate investor. I lost a house that I didn't even remember that I owned. I lost that house. And I've had to fight for other houses during that time. And there was one house that had me on a freeze because there was no bank to receive my money, and it destroyed my credit for many, many years, a myriad of years. It was horrendous, but it was one of those things that the banking industry left on that one piece of property. They left an issue on that property, but we were able to, after I think it was like 14 years, we were able to finally settle. And a bank came in, purchased them from the bankruptcy court. They were able to acquire the documents of my house, and I was able now to have a company that I can send a check to be able to finish paying off the house. So we were able to settle it. But that's one of those things that has never happened before. It won't happen again. But because of the laws that were written in the real estate items, that's what was placed on that property. So, my friends, I want you to know this is where we are in today's environment. We're finding ourselves to where it is important to make sure that you have your financial position in good standing, even though you may find yourself at hard times. And I have, from time to time, God has taken me out of bad situations to be able to bring in something good. So hopefully you're able to use this advice to be able to help you as you move forward in your business, in your ministry, in your work. Remember that just do things right. And if you make mistakes, repent, ask the Lord to forgive you, and he sets you right back into a right standard. Okay. If you have any questions, I want to encourage you, just write to me. Subscribe to one of my websites. ClarkOrtiz.com is a primary website that I would recommend you to subscribe to, ClarkOrtiz.com. And let's go ahead and reconnect there. Pastor Clark, until next time, remember Jesus loves you, and so do I. Go take on the day.